Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 31st of May. So I've seen a very volatile week this week. Indices are down, currencies are all over the place. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so I'll start out here with the Aussie USD, and we can see here we've had a very up and down sort of week. Look, it hit the targets that we were after. That's all we can ask for, really. It landed right on the sweet spot at the 20 moving average, 66 cents, and then had a good reaction all the way up to 66.80, the levels we talk about every single week, it seems, at the moment on the Aussie USD. So if you're actually trading those zones, that should have been an easy trade for you, especially after it closed here at 66.20. This is the level that you would have attacked it because it hit the 20 moving average and that support zone. Obviously, we had a close well above it, and that is your entry point. And the 66.80, we've been talking about that as the exit for a long time, so hopefully you're able to get that. But straight away, this is the volatility that I was talking about. It basically reversed all the way back down and went even a little bit lower into just below 66 cents. And today's candle is just all over the place. So the volatility is certainly ripe, waiting for economic data, obviously, from the US. So the dollar index is playing a role here, but very, very mixed up. But look, where we find ourselves on Monday is going to be important, because if we're trading around this level here at the support zone, just above 66 cents, any form of movement in a high, low sequence on a smaller time frame would signal that we're probably going to move back up to around that 66.80 again. It's been a very good zone. But of course, if we're trading underneath the 66 cent mark and we're looking underneath the 20 moving average as well, the next level we're looking at here is the 65.50 to 65.80 area. Only small moves at the moment on the Aussie, but that's okay. We're still with only a scalp at the moment, so pretty straightforward trading. Hopefully you're able to get that move up to the 66.80 though, because that was a really nice little bounce off that support that we've been talking about for a while. But it could certainly swing either way, but I think it depends on really where we land on Monday as to whether we're above or below the 66 cent mark. Over to the US dollar CAD, and look, this one's a little bit all over the place as well, failing to make new highs, and I am a little bit concerned about that. Obviously, you can see here we've got a series of lower highs right through. You could almost paint, it's getting very close to being a descending triangle there, as you can see. It's certainly looking that way. It's failing to make these highs. One break of that level, and of course we're going to be a lot more cautious. But I think while it's selling off at this point here, the key move here is the 20 moving average and this zone at around that 136.50 area. That's an important support zone. You can see all of the bouncing from this level here. You can see a lot of touches. That's pretty much where it's trying to break through. Really, in my mind, that's right in the middle of the hit zone of the triangle. So if we get a daily break below that level, around 136.50 or below, then I think we're looking at a move to the basically 136 flat, which is the next very heavy support zone, because it was a very strong resistance right through there. A nice little move down to that level. If we're trading above the 20 moving average, then we're looking at a move either up to the top of the triangle at around 137.10 or a break of that triangle, but I wouldn't be very keen on looking past that triangle until we actually get through it. So I'd be in scalping mode on this one as well, looking for that 20 or 30 pips, wherever the smaller time frame wants to take us. Lower high, lower lows, or higher high, higher lows. Trade within those bounds. We know where we are at the support and at the resistance, and look for positive moves in the direction of those lightning bolts. But a little bit volatile, as you can see. The week has been very, very up and down, and effectively finished where it started. So always be a little bit cautious when the market's playing that game. Okay, over to the US dollar yen, and you can see we've been grinding up again this week. You can see we had that big bounce off like we talked about last week, the big rejection back up to the 20 moving average, and it's done nothing but go up ever since. Look, today's session came down a little bit, as you can see. We hit a low of sort of 156.40-ish. It's one of those ones where, look, we know we're at very significant highs here. If we're going to bounce off the 20 moving average, I'd be inclined to look for long opportunities back up to that 157.80. But if we don't, and we get a daily close below the 20 moving average, that's when we're going to start looking at moving back down to that sort of 154.50 area as the target zone. So Keep an eye on this one. It's really right in the middle of nowhere at the moment. It needs to either daily close above the 157.70 to 80 level, and at that point, you know you got resistance. So just be very, very careful about that. There's only very small trading without proper resistance in front of you. So keep the trades relatively short on that one, or we get a daily close below the 20. If we get price action back down here around that 156.20 and it's resting on the 20 moving average, and early next week we see a sequence of higher highs and higher lows, I'd be looking at aiming for the targets around 157.80 to 158. They would be the best moves for the US dollar yen if that eventuates. But just be it's very condensed here. It doesn't look like it, but there is a lot of problems. Basically 100 pips away or apart, I should say, in between here. So until we get a daily break on either side, it's just trading inside those two zones. All right. Dollar index, again, a very, very volatile week. We had a really, really big bounce off here. Good hammer candle that pushed it and propelled it all the way up to 105, sort of 15. But we know there's resistance there. We've seen it before, and it gave back basically nearly all of its gains, short of a couple of points in the last session, and trade basically below the moving averages again. These two candles are telling us that it's very, very uncertain where this one is traveling. Failed to continue on the new high. In fact, it didn't even close above it, as you can see. Basically, it closed right on the 105.15, as you can see right there. That's where it closed, and of course, it just shot off down all the way back and nearly gave its gains away. This is one of those ones where I would be waiting. If we get a daily close above the 105.20, happy days. We'd be looking at shorting the euro next week. But if we continue the weakness and we basically get a close anywhere probably below 104.20, which is the key zone here, we know, then we're looking at a move potentially down to the 103.50, which is where I'd be targeting. So it's also stuck in a bit of a zone. We know 104.20 and 105.20 are extraordinarily strong here. So trade inside those zones until we get a daily close above them. But of course, the euro is the one we're going to be looking at using the trade for as its proxy. And it did the same thing. As you can see, we had a massive shooting star here and a big move back down to the support level at 108. Found support at the 50 moving average and the 108 and did bounce off. Now, it's a lot of volatility still. Like it's not clear cut. Yeah, most of the time we do these Friday wraps and we've got pretty clear movements. The last couple of days has been really, really volatile. So I'd just be really careful when you're trading this week or towards the end of this week until we get a little bit more clarity, until these candles settle down a little bit, because the volatility isn't breaking in one direction or the other. All it's doing is spiking between the zones that we're talking about. So trading can be a little bit precarious when that happens. So just be a little bit mindful that we are seeing a lot of volatility. Look, if we see a series of higher highs and higher lows on a smaller time frame, we'd be aiming for the 108.80, but a daily break below the 108, same rule applies. Then we're going to start targeting that 107.50 and then down onto 107. So really, scalping mode is absolutely the call of the week this week. We're keeping our trades very short and sharp because the market doesn't know what it wants to do. And if the market doesn't know what it wants to do, we certainly haven't got a longer term direction that we can actually aim for. So keep the trades short and sweet and get out before the volatility spikes get you. It'll settle down. It just needs to calm itself inside a zone until we get those daily breaks below the 107 or above the 108.50. We're just going to keep it in scalping mode. All right, then over to the US 500. This has been a pretty weak sort of move. All week we've seen weakness. It's below the 20 moving average now, and more importantly, it's below the 52.50. It would want to be getting back up there and getting up there very, very soon. If we're trading underneath this level on Monday, I would be starting to target the 51.80 as the target on this one. If it gets back above there though, then look at the 53 sort of 20 area, the previous highs, as the target for the long. So on Monday, really, really straightforward. If we're trading above the 20 moving average and above 52.50, we look for long swings up to the previous high at around 53.20. But if the daily closes below 52.50, then we're going to look at targeted swings with the lower high, lower low sequences on a smaller time frame down to around that 51.80 as the first target. That is the first support zone that you'll see. A break of that, then we're talking a very different game. But until then, this is the area that we're targeting on the short, and this is the area we're targeting on the long. So really, really straightforward trading. Just wait for the close and we'll see which direction it gives us. So I hope everyone's had a good trading week. We've had some good opportunities, but a little bit of volatility that may have been a bit difficult if you weren't there right at the time. So hopefully you're able to take advantage of some of that. Have a fantastic weekend. I look forward to seeing you all next week.